Welcome to the Advisor View podcast. I'm Josh Heil, CEO of Citizen Mint, a private markets platform built for RIAs and family offices. Each episode, we bring on an RIA to discuss their background, client focus, and what makes them differentiated. So today we have Frank Byskov. Glad you're here, Frank. Maybe you can just start off by just telling people about your background and your path into wealth management.
Well, it was a little bit of an alternate path. I've been working in various roles of the financial world, but kind of out of college, got the job I could get, and then worked from there. And it's been a really interesting journey. But when I finally landed in a wealth management role about 15 years ago now, it was like, now this is what I want to do. And then over time, like I started my own RIA 8 years ago, and it's the job I've always wanted. I may not have known at all times, but it's a blend of everything I really enjoy. Both the theoretical portfolio construction, risk management, combining that with the educational and storytelling with clients. And I think that's a really good combination. So it's been an interesting journey for sure, and a good one.
And so what made you leave your previous firm and start your own thing?
I think I've always wanted to have my own firm, but the big driver was I wanted to do things a little differently. A lot of that kind of incumbent financial firms, I didn't think offered a service that I could kind of mirror myself in. I wanted to add sustainability being a significant portion of what I do. And so I decided let's start my own, let's do it the way I want it done. And that was, it was an uphill battle for a little while, but then all of a sudden things clicked. My messaging got a little better, got in front of the right people. I have an amazing book of clients that I really enjoy working with. So it's been a great journey.
And what about the name? How did the name come about?
I had to come up with one. So there's not too much going. It was more like come up with something that I could relate to. And 44 has just been a number that has been recurring in my life. Like I grew up in 44. I bought a house myself that was 44. And so it was just kind of like a nice number. And the triple F, 44 Financial, kind of had a ring to it. So not necessarily like a deep thought behind it, but it was just one that made sense personally.
And so maybe you can talk about your differentiation and like just when you're talking to a client, what are you telling them that you're going to do differently for them than another wealth manager down the street?
I'm going to try to I think the best place to start with a client is like kind of figure out like, okay, the financial planning aspect, like what do they get the goals going, but then customizing the experience a little bit to like their values, their goals, their personality. Other advisors do that as well. I don't think it's kind of how it should be done. So but I try to customize the values-based aspect to clients as much as possible, and make it a higher service level for clients that normally wouldn't get access to that level of service.
And then maybe you can talk about just thinking about the clients that you usually work with, and is there any certain demographic of client that you're usually talking to, or is there any correlation of clients that you're usually working with?
My niche is nice people.
I like that niche. Yeah, that's a good one.
Yeah, that's my starting cohort. I don't have like set asset limits or anything else. I do think financial advice should be accessible across multiple demographics. Obviously, there has to be a business case in it as well. My target is like the mass affluent segment, and that kind of depends on where you live too. And obviously, a big portion of that is, by definition, a high net worth group. That limit is kind of low compared to like the terminology. But where, like, if you make smart financial decisions, you set yourself up for success. So my very rough definition is those that have some but not unlimited resources. And then trying to bring some of the options that the ultra high net worth clientele has always enjoyed, bring that down market a little bit more. So like it's allowed both technology and there's more democratized access to certain more like specialized offerings now than there used to be. And I really enjoy that part. Obviously, it doesn't make sense for everyone, but where it does, that is an interesting proposition both for me and for the clients to really like make a difference for them. And yeah, it's a really good group of people I'm working with, and it's fun to be able to like offer services that they didn't used to have access to.
Yeah, no, definitely. And would most of your clients be considered in the accumulation phase or in the distribution phase?
They are mostly in the accumulation phase, but I have clients from I think late 20s to like 80. So it covers a good span, but the majority of my clients are still in the accumulation phase. And that's where, as I mentioned, for the business case comes in. They may not be quote unquote great clients right now from a fee perspective, but there's potential for them to grow into it where like it makes sense over time to keep them as clients. Again, I have to like working with them, otherwise that's an uphill battle. But it's a fun group, and a lot of them are like small business owners, entrepreneurs in various ways, and you just get involved in a different way. They have different levers you can turn. Where I do think financial advice becomes more valuable, even for a smaller client. And, if they have a nice exit, that makes a good case for me as well.
Yeah. So how do you kind of build your portfolios around client goals rather than just market forecasts?
Well, I think kind of having that a neutral portfolio to start with, and then adjusting from there is a great place to be. There's a lot of great research out there that I follow, and then I do a swap between what funds they offer, what styles they offer, onto something that I think has a more values-based alignment, but with the same like theoretical like efficient market style approach. And that makes for an interesting portfolio construction process that allows me to like make a different be a differentiator, like, and looking at various like metrics like carbon footprint, equality, whatever matters to the client.
And maybe you can talk a little bit
that makes
about
them
that,
hurt a little bit.
the values alignment that your clients are looking for and how you actually implement that in their portfolios.
Yeah, well, I have a questionnaire sent to all clients, which provides a good starting point as to what really matters to the clients, and then we look at the portfolio. What do they have currently? What can we do to improve on it? What's really important? While at the same time building portfolio that could pass muster in like in financial theory, where like it still makes sense from a quote unquote greed perspective, but while still being one that you can feel good about holding. So it is. I have a starting universe, and then like I tweak it for clients as necessary, and it is. It allows for a deeper conversation with clients as well. A lot of people don't enjoy talking like numbers and charts necessarily. More like what does represent? What goals does this allow me to reach in my personal life, and how is this aligned with what the values I believe in? And it becomes a deeper conversation at that point, uncovering a lot of the questions that they may or may not know to ask. So I think even from a planning perspective, having the values-based conversation uncovers a lot of information as to like how to build something that is more meaningful for the client.
Yeah. And so maybe switching gears a little bit. So when do you think for you, this role of private markets is a good place for clients to access or add to a portfolio?
Yeah, well, that is like a longer conversation, because my base case is like liquidity is very important, like where you can exit a position if you need to. But when it makes sense to do something that's more illiquid, more like custom, that becomes a longer conversation. And it has to be obviously a good fit, but I think private markets offer tremendous opportunity. And we've been talking for a couple of years. We have still to do the first deal, but that's a matter of time more than anything else, because finding that right opportunity for a client, I don't think is. Private markets is less scalable than like the typical portfolio building, and requires more conversation, requires more buy-in, which is both interesting for me and for the client, because they feel like that there's a different level of involvement, but the opportunity has to be the right as well, and for the right sliver of the portfolio. So it is. It's an area I'm paying a lot more attention to now. So now it's just a matter of like finding that right fit to really get going. And I have risk as one of the core tenants that I work with, and part of that is I take a while getting comfortable with a new setup. It has to simmer sometimes for a really long time before I'm ready to jump in, and potentially like kind of over research the ramifications of something. But then when I do feel comfortable, I'm ready to go in. And some of the investments I have done are it's more like they're not on some of the big platforms because they don't meet certain thresholds, but I'm really comfortable with them because of the management behind them, the profile, the process, more so than them meeting certain financial, like 5 years over X million AUM. I'm more looking for the process, the people behind it, and that's where like my comfort zone is built.
Yeah, no, that makes a lot of sense. And I think, it's kind of also what goal or part of the client's portfolio are you solving for? That's what I always talk to clients about. I'm like, hey, what are you actually trying to solve for with private markets? And here's the things I think you should be solving for, like either real diversification, so you're not as correlated to public markets. And I mean, even looking at fixed income over the last 5 years, it's been abysmal. I mean, absolutely, you can't cut it any other way. Like it hasn't produced returns and it hasn't produced real diversification for clients. So it's like, and then, on the backside of that, it's like volatility dampering and kind of like, getting access to parts of the market where you might not have had access before, especially given how concentrated the S&P 500 is. And actually, it's going to become more concentrated this year, given the SpaceX IPO, the OpenAI IPO, the Anthropic IPO, where you have probably the top 10 stocks. You're essentially 80% correlated to whatever happens in AI at that point in time. So.
Yeah, no, and that's a big part of how the portfolio construction, where I think diversification is, it comes in a lot of different colors. Like even my US large cap is diversified in approach. I have a market weight and I have an equal weight approach, and it just makes sense to do it. And from a sustainability angle, a lot of clients have questions or issues with the concentration in tech at the top for various reasons. So I think having the diversified approach in different ways makes a lot of sense. And that's, as you're saying, the uncorrelated assets really, they add a different layer of value. And you can always talk like, is the S&P 500 the right benchmark to measure against? It's the one everyone uses, but is it the right one?
Yeah.
Because I don't think sustainability and portfolios, that comes up like, do you give up return? It's like, well, compared to what? And what is the return? Obviously, there's the pecuniary, which is a newer word in our vocabulary. The pecuniary return, which is obviously important. That's why we invest. But it's not the only return metric. You can talk like engagement. You can talk access. We had a great meeting yesterday. I'm in a group called Advisors for Good, which is sustainability focused financial advisors, meeting up, sharing best practices, ideas, etc. And someone mentioned on there, it's like, well, if I didn't do sustainability, and she does it very customized to some clients that have very strong values, they wouldn't even be in the market. It doesn't matter if they give up like anything compared to the S&P 500, because they wouldn't be in the S&P 500.
Yeah.
And I think that is another like return characteristic of sustainability. You get people off the sidelines that may not want to do it because they don't like the status quo. And that has real value, kind of bringing more people in, and thereby increasing the value of sustainable investing and the impact you can have.
So what's the number one question clients are asking you right now?
Thankfully, the same one it's always been, like, when can I retire? It's not how do I get to 10 million. It's more, when can I retire? And that is that really shows the real value. And I think that's true wealth, is having the options. You can always choose to work more, but having to work more is not necessarily as valuable. But from a sustainability angle, it is both in it's the tech concentration, it's AI, it is like greenwashing that is going on now. Like a company is doing things that I like, they're not saying it anymore, but are they still doing it? Like DEI is now a bad word, but companies were doing good DEI practices before it was a term, and they're still doing it because they make sense from a business perspective. And like looking through the noise and the greenwashing, now they might be green hushing and not talking about it, but they're still doing it, and that's requires a little bit more research, a little deeper data. But that is where I do think it makes sense. When everything is popular and out there, like things get lost. It's when you kind of fighting against the norm. I think that's when the true value shows.
Yeah. What about AI, just in your business practices and how you expect it to impact you over the next few years?
Well, that's one of those I'm simmering on a little bit. I'm diving into it a little bit, kind of help me with tightening up some like letters, newsletters, etc. But I have some serious concerns about data privacy that I think most advisors do. As to what once it's out there, it's out there. So like what do you give it access to? And it's evolving so fast, it's hard to like really get on top of stuff. One thing that will ease my use of AI, which I'm looking into now, is like my custodian Altrust has an AI assistant, but it's built with custodial safeguards, which means like a lot of my issues have been answered already. I don't have to rely on something else. So I think that it is a concern for a lot of people, and there are solutions out there. I think it'll be a tremendous help over time. Does it solve all the issues? No, but it does create new ones as well. But having the conversation with people, like how, like, will everyone be out of a job? Well, that's what people said when the computer came out, when the internet happened. We evolve. Certain jobs will disappear, others will evolve. But I am slowly adopting AI. I do think it can have a benefit, but just because it has AI doesn't mean it is amazing. Because that becomes more of a marketing thing. Kind of like ESG funds, it was turned into more like marketing more than like true value. It's like, okay, we have 10% less oil and gas. We call it ESG. I don't think that has true value in the same. I expect the software providers are used to come out with the best possible product, given the parameters. If that includes like a level of AI, there's always been some, maybe not as smart, but there was a level of like technological aid. Now it's just faster paced. And I expect the service providers to offer a good product. I don't need to have a label saying it includes AI. As long as it meets the safeguards and like from data protection. But again, that's in the vendor due diligence aspect, and having that trust that they safe keep what we give them.
What about where you see wealth management headed over the next 3 to 5 years and trends?
I do think that technology and AI will help making financial advice more accessible, because it can help you make more clients profitable by having less administrative burden on a client relationship. So it is my hope that financial advice will become more readily available to more people. If you don't have to do as much, you can charge less and service more clients and still do it well. So that is kind of where I see it. And part of that also and one of the reasons I started my own business as well is the cost compression. I do think the traditional model is questionable. The 1% of assets, is that really the value you provide? Some say like you provide more, but finding a better way to get compensated, I do think will continue to evolve. And again, making using technology to your advantage can make it more affordable for more clients. So that's kind of where I kind of think and hope the industry will go.
Yeah. Here's a little bit of an off the wall question that I like to ask at the end of these calls. So what's one thing that people don't know about you, or one hobby that you love?
Well, I've been like my lifelong sport is swimming, and something I've always loved. And a lot of people know it, so it's not like a major secret.
Yeah.
It is. It's one thing that I still identify with, brings me a lot of joy, and it's just a great start to the day to get in the pool, get a good workout. The arms are hurting all day. It's a workout I can't get anywhere else. And if you really search, I even have a couple of instructional videos out there, how to do a flip turn and how to do a freestyle well. But you might have to search for a little bit to find them. They're older age by now, but that is one thing I spend a lot of time on and energy, and it brings even more energy back.
Yeah, that's great. Well, thank you so much for the time, Frank. Really appreciate your insights and thoughts, and we're excited to have you here.
Well, thanks for having me. It was a lot of fun. I look forward to our continuing conversation.